There's a level of economic growth that needs to service the interest payments. But if everybody's interest payments are too high, the answer is firstly to have the interest rate as low as possible, which is why the Japanese have a much lower natural rate of interest than everybody else, because they're 260% of GDP in debt, but their companies are less in debt.
So they've trapped themselves. They have so much debt they can't let the interest rate rise.
Nobody can. This is why we're going to have a recession and we're going to cut rates back down to zero. It's impossible to work.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal dives deep into why you can't afford anything, how the economy became one big Ponzi scheme, and much more.
What we are doing since 2008 is mutualizing the bankruptcy of the system via the debasement of currency, which is...
When you say mutualizing, you mean making it everybody's problem?
Yes. You can either raise taxes, which they're trying to do too, but they're also printing currency via the mechanism called quantitative easing, which is actually debasing the currency, which means that every time they do it, asset prices optically rise. They don't actually rise. Because if you look at the central bank balance sheet and divide all assets by it, so you're changing the denominator, it's normally US dollars, but when you use the balance sheet, you say, okay, this is the purchasing power of dollars. Now, how many dollars are in the economy or excess printed? And what you find is something like the S&P 500 has gone nowhere. Real estate, gold, gone nowhere. And there's only two assets that have actually outperformed, which were crypto and technology. Okay, which is why we all feel like even though stocks are going up and our 401k is going up, nobody's getting any richer. Okay? We all know this intuitively, that we're not actually getting richer because the stocks I sell doesn't buy me more of a house. So what was the point of buying the stocks? The value of my assets aren't going up. But that is a mutualization, which is bad because it mutualizes it amongst people who don't have assets. So you'll never be able to buy an asset, which is why when you speak to a millennial now, they're like, we can't afford a house. Why? Because they came in to the labor force after the Fed started monetizing or lowering the value of the denominator. So property's got more and more expensive for them. It's impossible for them to buy property, really, unless they're really lucky in the workforce or in entrepreneurship or whatever it is. But generally speaking, it's become impossible. And everything has got more and more expensive, assets have, because of this optical illusion. But wages haven't gone up, remember, right? That's the key thing. Assets are going like this. We were doing this before because of demographics, and it was making people pissed. And now we're doing it from debasement, and there's no way around it. So what debasement does, on the other hand, remember, it makes the price of assets look like it's going up. This is why you can't have a banking crisis of the order of magnitude that existed before 2008. The reason being is you just print money the moment you see it, and voila, everything goes up. So the value of the collateral, so if you think about a debt, it's collateral plus the debt, and the collateral is what guarantees the debt. If you've got a banking crisis, your collateral is often falling so fast that, like commercial real estate, right? We're going to have a problem with that. So there's a bunch of debt, and the banks have got this commercial real estate as collateral, and it's all bloody empty, and everybody's going to try and get out of it. So the answer to that is print money and essentially magic that collateral higher, or put it on the central bank balance sheet. Europe has already done this. So I don't think you can have a systemic collapse because the value of the assets can never go down enough. This is what most people can't get their heads around.
Well, so I'm going to...
But we will get... slightly... but there is... We'll play out the future a bit because there are ways where it could go even more wrong than this ongoing mutualization amongst the people of the costs.
Some Bitcoin traders seem to be brushing off concerns about the usual September dump, even though history suggests otherwise, and the macro environment could be a strong enough factor to challenge the ongoing narrative. Although September is historically a negative month for BTC, the combination of a United States Federal Reserve rate cut and a relatively robust U.S. economy could surprise the bears. We believe the chances of BTC settling above $60,000 to be higher than the chances of it settling below it, Indy added. At the time of publication, Bitcoin is trading at $56,633, having remained below $60,000 since August 30. Although future traders do not anticipate a near-term move back up to $60,000, Bitcoin revisiting $60,000 will erase over $584 million in short positions, according to CoinGlass data. Meanwhile, crypto trader Don Crypto Trades told Cointelegraph that in September, the average return is about 4%. Considering Bitcoin's volatility, that's not as bad as people perceive it to be. CoinGlass data shows that September is the worst month for Bitcoin, with the asset posting an average monthly loss of 4.49% over the last 11 years. Dan Crypto Trades said he'd be watching Bitcoin's longer-term price chart for a higher high and higher low, a bullish signal indicating buyers dominating the market over sellers. I'm mostly watching for price to flip its market structure to bullish, he explained. For now, I would want to see BTC trading back above $65,000 to show strength, he added. It follows shortly after crypto analyst Matthew Hyland highlighted the need for similar priced action after Bitcoin fell below $58,000 on August 30. We really need to start to bounce out of this and make a higher high to further confirm that we are in this uptrend that we've been in since August.
Because the asset, which is your future self, it's your future consumption, has gone up so much that nobody can afford them. So you've kept them happy with dopamine and sugar hits of crap.
You've kept them numb. I won't say you've kept them happy. You've kept them numb.
Okay, yeah, happy's the wrong word, but you're right. But look, I went down this journey that you're going down now in 2012. And that journey led me to crypto. I saw it and I knew that this was the answer. And that's why I first bought Bitcoin in 2013, was exactly this, is once you see what has happened, we know the system now, regardless of how it ends, whether it ends in slow, ongoing death of economic vibrancy or a spectacular blow-up, the answer is you need to transition to what I call the Bitcoin life raft or the parallel financial system. It's there, and you can participate with $1 or $1 billion.
Crypto market sentiment has fallen back into extreme fear as Bitcoin briefly fell below $56,000, while BitMX co-founder Arthur Hayes predicts it could sink at another 12% to fall under $50,000 over the weekend. The Crypto Fear and Greed Index, which measures market sentiment and trends to give a total possible score of 100. It a score of 22 on September 6, showing extreme fear, a 7-point drop from the date prior that pinned sentiment at fear. It's the lowest score in price since the index hit 20 on August 8, and the first time it has re-entered the extreme fear zone since August 12, when the index hit 25. Bitcoin is down 2.7% in the past 24 hours and a low of $55,838 after a fall from above $58,000, wiping $29.7 billion from its market capitalization. It has since slightly recovered from its low to trade at $56,533. BTC is heavy, Hayes, the former boss of crypto exchange BitMX, said in a September 6x post. I'm gunning for sub $50,000 this weekend. I took a cheeky short. Meanwhile, Bitcoin has been struggling to gain momentum amid worries of a sluggish United States economy. U.S. jobs data released on September 5 fell short of economist expectations and has raised further concern about an expected Federal Reserve interest rate cut. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time, and do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.